SD Metals and Markets viewers and listeners out there. Gold and silver prices ended last week strongly, but worked sideways and downwards throughout this week. We'll likely end around $1,200 an ounce gold and $14.60 an ounce silver. We'll be getting to our week's interview in a few brief minutes, but I wanted to begin sharing with you some highlights from a video I stumbled upon about a week ago. It's from the Monetary Institute, filmed in Zurich, Switzerland on February 5th, 2018. In the clip, you may recognize some names as Larry Kotlikoff. He's a professor who often testifies before the U.S. Congress, warning them about our having some $210 trillion in total debts and unfunded liabilities at net present value. As well, you'll see former head of research at the Bank of International Settlements, William White. And finally, the man speaking for most of the time is a German monetary and development economist named Richard Werner. He speaks frankly and openly upon 2 points we will be discussing amongst many others this week. Emerging market currency chaos, thanks to their recently acquired $14 trillion in US dollar denominated debts, as well as central bankers' wet dream of a future cashless society where central banks can more easily bypass the more traditional fractional reserve-based model we have today. Have a look and listen with this week's Metals and Markets interviews to follow.
It's the community banks, the small banks, that have been doing sound banking by lending for productive investments. They need to be encouraged. But the central banks are killing them. The ECB is currently killing the German community banks. They will be gone in 5 years' time, sadly, under ECB policies, heavy regulation, massive regulation. They can't afford to hire 5 more people just for filling in forms. And also, of course, the zero interest rate policy and negative yield curve. That's in order to drive them out of business while they're giving money to the big speculative banks. But ultimately, the game plan, as I said, is to get rid of banking entirely and then have only central bank digital currency. And I think we have to fight for our decentralized money creation with decisions locally, because that's one of the questions we need to discuss actually today. Who creates money in this new system? Who's making those decisions and how's that done? And I believe it's best to have decentralized local decision making, also for governance reasons. You mentioned governance, and these local banks have accountability to the local community. They're embedded in the local community. You can't just do a crazy project. That's done by the big banks because nobody knows what they're doing, not the decentralized small bank.
Use that in our country. So we're leaving a bigger problem to our kids because this $200 trillion problem is getting bigger by $6 trillion a year. That's the true deficit. So that's going to require real structural changes, real damage to some generations over others, real sacrifice, and we're not discussing that. And this is why our country is heading to second-rate status through time, because we're not really dealing systematically with the long run.
What's the role of banks in this? Can I just add one comment to this? What's the role of banks in this, creating all this debt? And it's just 1 minute on this. Think of developing countries, and Bill mentioned the debt crisis we've had in many emerging markets and developing countries. They've been piled. Huge debt, international debt, has been piled onto them because essentially they've been encouraged by the Washington institutions to borrow from abroad in foreign currency. And the idea is, they don't have enough savings, they don't have enough money for growing. The big international banks will lend them the money. And this was done. Now, the truth of the matter is, I'm professor of international banking, the rules of international banking are such that all the dollars they've borrowed and the pound sterling they've borrowed and the euros they've borrowed never entered their own country at all. It never got there. So if they borrowed abroad, say pound sterling from London, 500 million for South Africa, and then the South African finance minister says, well, actually, we'd like to spend some of that at home in South Africa. And they tell Barclays, can you sort of change that? Oh, no problem, we'll exchange that for South African rand for you. Where does Barclays get the South African rand from? It calls their correspondent bank in South Africa and says, we would like to do a deal, sell 500 million pounds sterling, buy South African rand. What's a good rate? They shop around, they agree. Now, where does the South African bank get the money from? It creates it out of nothing. So, actually, the lender banks borrowed the money from the developing countries, from their banks locally. It was all a big con. That's how they got indebted. Their assets and their resources were the collateral so that the foreign lenders, which is creating, getting the local banks to create the money, they got control over these developing countries. And were the community banks doing this? No. In fact, these developing countries have been told how to set up their banking system, decentralized, with local stakeholder community banks. This problem would have never happened.
All right.
It's the big international banks that did this, and that's why we do need to distinguish between the big bad guys and the good local guys. It is, that complicated that we have to distinguish between them. Thank you.
Okay.
Hello and welcome to this week's Metals and Markets Wrap. I'm your host. This is James Anderson with SD Bullion. With us this week is a new guest. His name is Matt. He runs a video channel on YouTube called Silver Fortune. He's with us today to discuss metals and markets. So welcome to the show, Matt.
Thanks for having me on, James.
So Matt, I just wanted, I found your videos through YouTube and I've seen and listened to some of your content. We posted a lot of it at silverdoctors.com. Especially recently, I've been noticing the posts that have been up there and watched your content and really have enjoyed it. So kudos to you. I wanted to begin with just kind of establishing, who you are and why you are making these videos on YouTube and what got you interested in precious metals.
Yeah, well, you bring up silverdoctors.com, and I see a lot of the other people you share over there. I've spoken to them or I know of them, and I know that they have a history in the trading the silver market, or they have a history in finance or something like that. I don't have that same pedigree. I'm self-taught. I'm a young guy. I'm a grad student in not finance, not business or anything like that, but physical therapy. So this is nothing more than just a passion of mine, something that I originally started on YouTube as just kind of a hobby, something I was interested in as I kind of started to realize, hey, precious metals, the economy, this stuff matters, more than I would argue things like, just plain politics or something. And so I started it out as a hobby, going on 2 years ago, almost 2 years ago, I've been on YouTube. And kind of from there, it kind of morphed into more of a passion of mine, something I want to do on a regular basis. And so I've been teaching myself, always learning more about how the markets work, how silver and gold works. There's always more education to be had. So, that's a really big part of what I do on YouTube is I try and share that information with other people, as well as offer, what insights I, can offer. I'm certainly not the smartest guy on YouTube or anything, but I think I have some interesting things to say. That's, what my viewers are watching my channel for. They like some of the education that I provide and kind of bringing it down to maybe their level, because they don't, they have a day job. Yeah. Like so many of us, they do whatever, and they just don't have the time to necessarily study all of these markets and on a daily basis.
And speaking of are you a student at the moment, or have you already graduated?
I'm a student right now. Okay. And so, my long-term plan is like, oh yeah, physical therapy, but then there's this other side of my life in YouTube, and it's certainly, I don't know if I enjoy it more than my eventual profession, but it's certainly a passion of mine.
Yeah, and I'm not sure if I mentioned in the beginning of the video, we're recording this at 11:45 a.m. Eastern on August 31st, 2018, and thus my question. I was wondering, how is it that you're not at your day job at the moment? So obviously you're still in school, so this makes a whole lot of sense.
Yeah, there you go. Yeah, we're just finishing up a short 2-week break here, so my schedule is about to get much busier.
Well, that's great. And as far as you not having business education or having a degree in finance or this or that, that's not really necessary, because as you probably know, most schools don't teach a damn thing about gold or silver. They typically just teach you Keynesian economics, and very, very little mention about any monetary history in those programs. So for the most part, most people are better off not having that fill in their head, because they're more open to understanding, a longer term historical precedent for how gold and silver work and why they're still important today.
Oh, absolutely. I'll admit, without a formal education, I don't have all that real, I guess, deep economic theory that, I couldn't perfectly describe to you all the tenets of whether it's Keynesian or the Chicago school or Austrian or whatever. I get that. I understand especially Austrian and Keynesian pretty well, but I don't know all these as deep as some of these famous economists might. Mm-hmm. But like you said, what they oftentimes miss is how do those actually work out in the real world?
Right. Yeah, that's always a big difference between theory versus the rubber on the road. So moving on, we wanted to cover a couple points here, a couple topics that have been very important recently in the precious metal markets. I suppose beginning, we could touch on emerging markets and what's going on there. I know that In the last decade, emerging markets have acquired $14 trillion in debt, in U.S. dollar denominated debt. And so that's obviously been playing on the markets over the last months, last year or so. Obviously, emerging markets currencies are having trouble. And so I suppose you probably have been doing research on it too. So let's go ahead and hear some of your thoughts of what you've been seeing.
Oh yeah, this is fascinating to me. Most of my viewers, of the people watching this video, this is somewhat removed from their own life. They're from the U.S., Canada, Australia, from Europe or something like that, and so they haven't experienced this inflation, this depreciation of their currency. But it's fascinating to me to see a currency like Argentina. I think year to date they've lost almost half of its value, right? Or Turkey, to think that their currency could lose 20-30% of value in a span of like a week. That's insane to me. Mm-hmm. And I think that's just something that a lot of Americans or Westerners just haven't experienced yet. But beyond that, just looking at the markets, this is something I started to cover a while back, probably back in, I don't know, June or late spring of this year, talking about emerging markets and how there is more pain to come. Essentially, each of these individual countries, whether we're talking about Argentina, Brazil, certainly Turkey, if you want to throw China in the mix there as an emerging market, sure, they all have their own individual economic problems. They certainly have their own political issues. Take a look at a place like Turkey or Brazil, right? They have their own issues. But I don't think it's a coincidence that all of these countries are undergoing a currency crisis simultaneously. Maybe I think the currency crisis, if anything, is magnifying their political issues, and basically we have to look elsewhere for why is this happening. And so really what I've been talking about for a while now, and actually been referring to it lately as what's going on in emerging markets right now is actually it could be described as a U.S. sovereign debt crisis. And that's, it's been a little facetious because we're not dealing with the whole debt ceiling debate. Nobody's been talking about that for a long time now. But this is something that was pointed out earlier this year by, I think it was the head of the Reserve Bank of India, a guy by the name of Rajeet Patel. He was talking about how the U.S., both the government and the Federal Reserve, their policies are really what's hurting emerging markets. Okay, basically what you have is in these emerging markets, you have an expensive dollar. Okay, I describe it as, you talked about all the debt that they have right now. The way that I try and relate this to my viewers is, think about it for a second here. If you took out, let's say $1,000 loan, okay, and let's just pick an easy number, 5% interest rate on that, okay? Mm-hmm. Doesn't matter how long you're going to pay it off, in a year, 3 years, whatever. Okay, let's imagine now you have that $1,000 of debt at 5% interest, but inflation in your currency is at 10%, 20%, 100%, whatever. Sure, you want to pay off your debt, but ideally you'd wait as long as possible to pay it off because the purchasing power, the actual value of that loan is going to go down and down as the currency depreciates, and that's probably your best bet as long as your salary, your income is moving up in line with inflation. Mm-hmm. The opposite is happening right now in a lot of these emerging market currencies, right? Mm-hmm. Take a country like Turkey. Something like 90% of their corporate debt is in foreign currencies, primarily the US dollar and the euro. That's a huge problem. Mm-hmm. When all of a sudden your debt in terms of euros or whatever, or dollars, hasn't really gone up, but in terms of lira, it's gone up 30% in like a 1 or 2 week period. That's a huge problem. Mm-hmm. Okay, because they're doing business in their country in the lira. That's how they're getting their income. So that's really where this problem has come from. And so basically, I see this dollar strength in these countries, and I think more accurately, an expensive dollar to lend. Bringing this back to what I was talking about earlier with the Federal Reserve and government, I think that it's a result of some of their policies. Right. Most notably, their quantitative tightening, and then the U.S. government, for a variety of reasons, just because it's what they do, but also because of the Trump tax cuts, issuing a larger than expected amount of bonds. So that soaks up a ton of dollars. It creates a dollar shortage, not in the sense that they can't get dollars, but they're more expensive. Mm-hmm. And that's really what's been hurting these countries. And so, we have to ask ourselves, when is this emerging market crisis going to end? And sure, they all have their own political and economic issues, but as a whole, I don't see this ending anytime soon. Right. Not until the Fed goes back into QE mode again. or at least until they stop quantitative tightening. And that's really the only way out I see for emerging markets right now. And inevitably, this will continue to spread from emerging market. We're already seeing this morning, it's spreading to Indonesia, to India. I mean, it already has, but the headlines are out there now. Eventually, it's going to, the next one on the list is going to be, Australia or the European Union, and eventually the United States. And so, it's only a matter of time. It's been on the horizon for a long time. But in the meantime, I wouldn't be surprised if we continue to see the dollar strengthen, because of I guess flight away from those foreign currencies and their markets.
Now, in my experience, I mean, in 2003, I actually lived in Argentina for about 8 months or so, and that was right after they, in the 1990s, they had pegged their currency, the Argentine peso, 1-to-1 with the U.S. dollar. And that wasn't going to work because they kept, their debt kept increasing. So eventually they had an overnight devaluation in 2001 into 2002. Their peso went from 1-to-1 to 1-to-4. And by the time I got there, it was like 1 to mid threes. And so my experience of just seeing that firsthand, what that looks like on the ground, it really shook me. And it basically led me to where I'm sitting today doing this interview, because I saw it happen there and I see the setting up of it happening in the first world. Although people don't think it could ever happen, they think that just because the U.S. dollar is a reserve currency and we have the financial plumbing, that this could never happen in our country. But I think it's very probable in our lifetime that we may end up seeing some type of crisis with currencies. So hence my being in this interview with you. The other thing about these countries is, really wealthy people who live in, say, Brazil, Russia, Argentina, Turkey, they typically will hold some of the local currency, of course, to do transactions in their local economies. But if they have any wealth, they typically will, they'll hedge it by owning U.S. dollars or euros, and basically assets that are contrary to their local currencies. And in Turkey, especially, they'll own gold, for instance. Obviously the people that live in those countries buy gold in heavy fashion. So it's just a counterpoint in the term of, obviously the local people are hurting, but you can bet that the local wealthy people are hedged, certainly hedged against their local currency doing this, because all these countries have had this happen before. This is a regular occurrence, it seems, sadly, in a lot of these countries.
Yeah, and to add to that, you're talking about Argentina being at the Argentine peso being something like a 4-to-1. At the beginning of this year, it was around 20-to-1, and actually yesterday it briefly topped 40-to-1.
Right.
So that just goes to show just how quickly these things can spiral out of control. But yeah, you're right about these countries that have dealt with not just economic problems. I mean, we've had those in the U.S., but real currency problems, very unstable currencies. You're right, and I think a lot of times their governments try very hard to discourage that. I think later on in this interview we're going to be talking about India, but India, their government, I think, despises the fact that so much of their population chooses to put their wealth into things like real estate, but also precious metals. I mean, they have tried very hard to discourage investment in gold in particular, putting various regulations or tariffs or whatever on gold imports. And as maybe you're about to talk about this right now, but a lot of those individuals have switched to silver as a whole.
Yeah, before we get into the topic of India, I do want to touch base real quickly on a tweet I saw earlier this week that still has to do with the U.S. dollar strengthening versus emerging markets. I don't know if our listeners out there know of Raul Paul. He is a co-founder of Real Vision TV, which is a really excellent website for, I'm not a member of it. I'm still kind of using their free stuff for the moment, but eventually I am going to bite the bullet and probably get a subscription, because their long form videos are usually with some of the top people in finance, and they're usually really long, like 1 hour, so you get an in-depth view of what people are thinking in the world. He tweeted out something. It's a chart that I'll put in this video that people can look at, but it basically, it's a little complex when you first look at it, but it's measuring the DXY, which is basically the US dollar versus other major currencies like the euro, the yen, etc. So the white line in the chart is the DXY, and it's going up. And obviously it's been going up pretty much since 2011. Obviously gold and silver have been pretty much going down since 2011. So it's kind of the inverse relationship between precious metals and the US dollar. The orange line is the emerging markets, and it's inversed. So when it's going up, the orange line, that means emerging market currencies are going down in value versus the US dollar. And the one point about the chart is the gap that you see in 2013 to 2014. That usually the causation is what he's alluding to, is the causation is when that gap happens, you then have the dollar strengthening and emerging market currencies blowing out. Again, we have another gap here in 2017, 2018, which is formed. And, basically he's insinuating that it's real possible that by the end of this year into 2019, the dollar will continue to strengthen. And so that's just a forewarn for anyone out there who's buying precious metals. You can expect lower prices potentially in the fall and early 2019, possibly, if this chart plays out like he's alluding to. So all I'm telling you is that $1,200 gold, $1,440 silver may not be the lows. Maybe keep some powder dry if you're out there, positioning in precious metals.
Yeah, you make a great point there. Looking at this chart, I mean, I certainly don't think that the situation is going to be that emerging markets that they move up to it's going to be the dollar, I think, in moving up to catch up with the decline in emerging market currencies. Because as I said, if we're looking at the underlying cause of this as a whole for the emerging markets, last time I checked, the Fed's still on the path of tightening. Mm-hmm. They're still far away. They haven't even hinted at loosening their policy anytime soon. It's going to take an event mm-hmm. to cause the Fed to change that policy, and right. Maybe that'll help throw a life preserver to the emerging markets at that point. But it's going to take something major happening, and then we can expect silver and gold to move up. But you're right. The dollar index. I wonder sometimes if even it should be stronger than what it is right now, just because, as you said, the DXY index, it's the euro, the yen, I think the pound, it's so outdated. I think I have the Swedish krona in there as well, but I think it just doesn't really capture just how weak some of these emerging market currencies are. Mm-hmm. So yeah, you're right. The next big catalyst I see is the Fed, reversing their policy in response to some sort of a crisis.
Right. For anyone looking for precious metals to revert, you like you said, you're probably looking at a black swan event, and then the Fed changing course, and then you'll start to see financial assets, remarket to market, and probably precious metals will probably zoom based on what the Fed does. So moving on, you did a video earlier this week that was posted on Silver Doctors about India. And I suppose, you could give some highlights as to what you were talking about in that video to our listeners.
Yeah. So, I mean, basically the gist of it is that, most of the West, the United States, Europe, whatever you want to consider the West these days, we have definitely cut back on our purchases of silver as an investment. You look at the U.S. Mint figures for 2018. They're pretty pitiful compared to, say, 2015, 2016. And that's kind of the theme here in the West. But India has been doing quite the opposite with these low prices, along with a weakening Indian rupee. They've been buying a lot of silver. As of June, so halfway through the year, I think it is June. They're on pace to account for basically a quarter of worldwide silver, demand or supply. They're roughly the same, around 1 billion ounces. So they're on pace for like a quarter of 1 billion ounces that they're planning on buying this year. And sure, India, they're a big, manufacturing economy. Whether it's solar panels for domestic or international projects, or electronics factories, et cetera. They build a lot of stuff. Not unlike China. Mm-hmm. But as I kind of alluded to earlier, they're also a country that has they definitely are drawn to precious metals as an investment, and they've been buying a lot. And I don't think it's a coincidence that they're buying while, in U.S. dollar terms at least, silver is very cheap, and certainly while their own currency is depreciating. As you said earlier, the wealthy basically fleeing to or storing their wealth in some sort of a safe haven asset.
Mm-hmm. Yeah, it's not even just the wealthy. I mean, you're talking about farmers do this, like literally really poor people What they do is when they get local currency, they just go and get bullion, and they hold the bullion, and then when they need to refinance, they use the bullion for the financing. So it goes from the ultra high wealthy to even the lowest peasants. A lot of them still buy gold, and if they can't afford gold, a lot of them obviously have been buying silver. Now, some of the charts I sent you earlier, just to give some context, you mentioned they are on pace to acquire about a quarter of all the silver that's been mined this year. 250 million ounces is the pace that they're on. One of the charts I sent you shows, silver versus Indian rupees on a long-term basis, ever since the fiat currency system has been in place. So basically 1970 to 2018. I'll put these in the video so you can see what we're discussing. But there's a strong correlation here. When you look at the price in the local currency, the Indian rupee of silver versus their silver imports, what you see is people will negate from buying when the price starts to go up, when it gets to peaks on the chart. And then when it goes down, local silver buyers will buy heavily. And right now, the rupee versus silver is at a pretty low point, starting to lower downward. And so that's why you see such heavy buying. A lot of these people, they're pretty similar to our own customers at SD Bullion, where they use price dips as a way to increase their position or to dollar cost average down their overall price point that they got into the precious metals with. And so the one chart I sent you that I think is probably the most important, because a lot of people, they talk about JP Morgan and their COMEX supply. And, obviously since the spring of 2011, they went from having 0 ounces in their COMEX warehouse that got rushed into being in existence up to now there's over 145 million ounces of silver. And that is a time span that's, 7 years roughly. And then you look over at Indian silver imports this year. The data that I'm showing you is it's through June of 2018. So if you just crunch down as far as the speed at which they've gotten to 3,839 tons this year through June, if you break out a calculator and do the math, essentially by this time, we're in August, the end of August, they should have more. They have imported more silver likely than JP Morgan has acquired in that COMEX vault over a 7-year time frame. So in a half year, India has imported more. And obviously, people who are listening, we all know that JP Morgan is literally right next to the price discovery mechanism in the COMEX. Obviously, we know that they have a lot of influence as to what the price of silver is going to be. All I'm saying is that the physical flow is very, very strong to the east, especially this year in just India alone. And the amount that they're buying is blowing out the amount that JP Morgan has acquired over 7 years in their transparent COMEX vault. So,
yeah. And, I had Ted Butler actually on my channel yesterday. The interview is just prior to us doing this. And, his take on it is that JP Morgan, I think he puts a number at like 750 million ounces that they potentially could have. And nobody knows for sure. Right. But it doesn't matter. Like you said, India, their imports dwarf that, right? Mm-hmm. Even just this year, if they're on pace for a third of that, and that's if JP Morgan actually has that much. And you're right. I mean, the flow of physical is to the east. For silver, certainly to India. For gold, to China. I had it's Lewis from his channel Snoggled. I had him on a while back, and I asked him, how much gold does China really have? Because we have, the numbers that people really talk about are the reserves that are listed by the People's Bank of China, their central bank, and they rose there for a while. They haven't really risen for a while now, and it's a fair amount of gold that they have. But as he kind of talked about is that in reality, China. They produce quite a bit of gold. They mine quite a bit of gold.
The most in the world year on year ever since the early 2010s. Yeah, every year.
Yeah. They mine a ton of gold. They don't export it, and additionally, they import a ton of gold. So where's this all going? And I think he put the number at something like 20,000 tons that they have between the People's Bank of China, which is the most public one, but then also things like sovereign wealth funds. Or maybe the ultra wealthy that could very easily have that gold confiscated in an economy,
or in state banks, of course, too.
Or state banks,
right?
Yeah. I mean, it's a huge amount of gold, 20,000 tons. Mm-hmm. So yeah, I mean, the flow of metals is definitely to the east, and I think they're gonna make a lot of otherwise bright investors look very foolish for throwing in the towel on silver when they, those that are invested in physical are building their position more than ever.
Yeah, for the most part, you're talking about just the mainstream Western investor who simply gets told about GLD or SLV and gets shown a spot price here and there. They have no idea about what physical flows are happening. They're not told that stuff typically on Bloomberg. And if they are, they're going to get told the official reserves. They're not going to get told about what's been happening since 2008 as far as underneath the spectrum of mainstream finance.
Yeah, absolutely. And the question we have to ask ourselves is like, how is this going to change things in the future? Like, how much is India and China and the East as a whole, Russia as well, how much are they going to benefit from buying that silver and gold? I mean, in dollar terms today, it's not a ton. It's not worth a huge, you look at yearly silver supply coming onto the market, 1 billion ounces, multiply that by the current price here, $15 billion, maybe $15 billion. And India is importing a quarter of that. That's a pretty small amount, but it's going to help them out quite a bit in the future, considering how much fiat is going to go down, and more importantly, how much silver and gold will go up in the future.
Right, those precious metals. I mean, it's virtually impossible to destroy them, so they're going to be somewhere, obviously. So fiat currencies eventually go down to zero. That's just the history of them, and that's basically by design. They end up going to worthlessness. But precious metals will always be around. And like you said, India, they're importing heavily in silver and obviously in gold. They're probably pretty similar in terms of China. They probably have about 20 to 25,000 tons amongst their private citizenry. And like you alluded to earlier, the government it's pathetic. Every time they try and monetize the Indian population and have them lend their gold to the banks in return for some type of scheme that they always throw out, nobody buys it, and it always fails. It's happened ever since I've been in this industry. I've seen them try this like 4 times, and it fails. It fails every time. And the citizens, they just don't trust their banking system. They know that their banking system is broke. That's basically why they demonetized the 1,000 rupee note, was to try and get more depositors to put their cash in their bankrupt banking system to make it look more solvent than it probably is. So India will continue to try and go down that route. They're going to continue to go down the route of, well, we're going to move to a cashless society. Well, great. Your citizens are still going to have precious metals, and you can try and outlaw that, but they're still going to have it. And I don't see that stopping. You can try and outlaw it all you want, but people underneath in the gray markets are going to continue to use precious metals no matter what the law says.
Yeah, absolutely. I mean, it doesn't. I'm not a fan of a cashless society. Even if I'm not a fan of fiat in the first place, I'm not a fan of a cashless society. But if you're looking for a country in which it makes sense, look to a place like a Scandinavian country or something like that. But India, where they primarily use cash and precious metals and all of that, it's ridiculous. And it's again, you have to ask yourselves if that's what the government is pushing towards. If they don't want you to own that. Maybe it's as simple as saying, well, if they don't want me to own it, maybe I should buy some.
Yeah, exactly. Well, Matt, I appreciate it. Is there any other points you want to get across to our listeners before we end this interview?
One final thing, kind of relating to how I mentioned I had Ted Butler on yesterday. And feel free to watch the interview or not, but basically to give you the gist of what he's saying, JP Morgan right now is, as we said, at the center of the price discovery mechanism on the COMEX. And as he puts it, they are in a prime position to let silver run up. Now, does that mean that it's going to? Not necessarily. They can move back to the short side of silver again, but it's something to keep an eye on. We'll get the commitment of traders report for this week later on today, and maybe that will give us a little bit more information. But certainly, I tend to think, and I'll be talking about this in a video tomorrow, but I tend to think that what we're talking about here with the Federal Reserve reversing their policy, I tend to think that is going to coincide with JP Morgan ultimately going long. So I think the two definitely can offer some insight into each other.
Yeah, so you're saying it's not a coincidence that they spent the last 7 years acquiring hundreds of millions of ounces of silver. Right.
No, absolutely not. That's something we talk about. I mean, who buys as much silver as they have and then just sit on it or just slowly sell it off? It doesn't make sense.
Yeah, it does make sense, especially as bankrupt as they probably are on a mark-to-market basis. They're going to need some precious metals to remain solvent in the coming issues with the economy, more than likely.
Yeah, I absolutely agree.
All right, Matt. Well, thanks so much for coming on this week, and thanks listeners out there for tuning in, and we'll talk to you next week.
Sounds good. Thanks for having me on, James.